Greetings, market rebels. Welcome to this week's macro measure video combined with our sector situation video. It is Friday, December 12th, 2025. It's, let's see, it's just a little after quarter to three. So it's about 2:47 p.m. here on the East Coast. I'm Wayne. Here's the Trustee Market Rebellion disclaimer. Here's our trustee intellectual property rights notice. Here is last week's slide. For those that follow it, I did the old obnoxious pink purple type highlightings for things that may have actually lent a hand that we covered. We talked about the AAII double whammy with more bulls and less bears, and it was actually quite a bit more bulls and quite a few less bears. And so that gave us a little bit of consensus discomfort because we were right there, kind of thinking, right, things were overall looking really good, but we were betwixt and between some key trend lines, and we thought that there was still plenty of subsurface percolation that we were not covering that could be evidencing itself a little bit more here this week, and I don't know, maybe next week. We decided not to get too far ahead of matters, and we noted that the mega caps were messy looking overall at that snapshot in time. We said if had to go with the flow, if pressed, very difficult to call due to arrested market. In other words, the market had sideways and it looked like it was ready to go in some ways, but we had some reservations because of that AAII and a few other factors where we thought maybe, just maybe, this is a little too easy. And we said that maybe the gang pulls us down first before pedaling it into New Year's Eve. And so this week that we did kind of get that early in the week pullback in terms of the paths we guessed at. Didn't really pull back all that much, but we definitely got that until we got close to the Fed meeting, and then things firmed up a little bit. And from there, we popped and then we dropped. And so we said that things look good, but overall the scariness might need to evidence itself first before we could get it going. And part of that problem could have been that it got too good too fast and convinced too many people that things were looking on the up, and up. We also said not to allow the holiday season warm and fuzzy feeling, and the TV commentators that usually try to drumbeat the rally into year's end, who lull you into a false sense of security, get you away from your top shelf risk management game. So, on that note, we will move into this week's slide. This week's slide is fairly different than last week's slide, and I'll just cover it, but I'm calling this a sequel, right? Essentially, right, we're betwixt and between again. Last week it was a happy betwixt and between with things looking good. This week we're set to end on a rather somber note. So we're still betwixt and between these two key trend lines on SPY, which is the main proxy we use to chart the market, because that way everyone can take the levels we discuss or the situation, whatnot, and trade those contracts, trade those strikes, etc., for the following week. Anyway, first line, I still think this is super interesting. There is so much going on. It's just one of those times lately where it's just been, wow, that's been super interesting to me in terms of not only just the technicals, but all the stuff that's swirling out there and how this can all play out. Because you don't really have this kind of an AI, some would call it bubble. Some would call it AI euphoria. Others would call it the future. Depends on your perspective. Some people think it's priced fairly. Some people think it's underpriced, and many people think it's way ahead of itself. So we'll see. We'll see how it all plays out. That's the one very interesting thing is you get to see how it all plays out if you stick around and pay attention. Anyway, all is no was well. So everything was well when we finished yesterday. I had a very good day in my own little trading yesterday, but the unfortunate part of that was it was mainly due to some of my holdings in the metal space, which many of you know I've been a long-term hodler in there and remain a long-term hodler. But that was those got I did some adjustments, thankfully, which I continue to tell everyone. I've been I think adjusting in a smart way. I moved in time again and lowered my capital at risk, and got into lower delta calls, and luckily it was just in time with the overbought. And it's something we covered this week in webinars. I think I even covered that today, where silver just getting short-term overbought really stretched. Three standard deviations removed from the long-term trend as per my Bollinger Band settings. And I just felt like that was the smart move to make, even though I'm still a longer-term bull at this stage. I just thought it was prudent, so I did it. And I, again, every time I do this, I seem like I should just close the positions, but you just never know. So I stick with just my adjustments and go from there. So I have to always suffer a little bit, apparently. Uh, so we'll see how that plays out. Anyway, summary of this week's developments. Everything was fine with the FOMC. They seemed to like everything as of yesterday's close, but then we got problems from Avgo, Broadcom, Oracle. The megas kind of ruined this party. The AI margins story, right, where maybe it's not going to be as wonderful as it's been portrayed. That's that whole story too. Not only is it not going to produce the margins or so on and so forth, but some people are, I guess, more people are calling the whole story into question with some parts maybe or things not adding up, parts not fitting. The AAII got a little worse. So in other words, it got more bullish, few more bulls, fewer bears, which only makes it a little more contrarian. So that could be part of the problem. Yields also moved up, and crypto could not develop any momentum. So that was that. The talk was also the subsurface percolator, one of the things we've been referring to as a subsurface item that could be percolating. The carry trade is apparently shaking the markets and what could develop next week. Something you may want to read up on if you can track some information down on that on formerly Twitter. So Friday's action put a damper on what was a good week for sectors in breadth. At this point, it's kind of weird because bulls are facing a little bit of a gut check, right? They really should be starting to turn and burn and power to new all-time highs, and they were in fact doing that in IWM in the diamonds earlier today. But we had another one of those what I'm calling insta retreats where we've seen so many. I was just talking about this earlier this morning when I had to sort of poorly fill in for Ryan because he had some real tech problems as part of the travel experience at his hotel and for a Market Rebellion event. And so I just stepped in and did what little I could. But I was talking about how, we got to be on guard for if we do have yet another very short-lived new all-time high experience. And the funny thing is, they did. They just really reversed it down quickly. It's another kind of rough day if you look at the candles and the diamonds. I'm sorry, the candles in the IWM and the diamonds. It's just not good. So this should be the bulls' time to shine. But they need to do it, right? They only have when we come back, they're only going to have about 2 trading weeks left. So roughly speaking, so they need to start getting on with it and doing it soon. We did note this many times. The consensus can be a rough place to be when the market is not trending strongly. And so that's why we were a little nervous, right? Because we saw the sideways action, the lack of breaking out, good stuff happening under the surface of the market, but not really great SPY action the last couple of weeks. And that is a little concerning. So we were a little bit uncomfortable. In terms of it may not, we're repeating this, it may not be as easy. So sometimes that's the reminder of not getting too far ahead, right? So sometimes things look really good under the surface in terms of your sectors and breadth, and yet you still have trouble because of some of these big weights or some real big problems develop, like Avgo, like Oracle, other names. So there's also plenty of other subsurface percolation we're not covering. And I would say that today the VIX really should be. We talked about how the VIX should have been down a while ago. It finally got down there, I think near 16-ish, and it finally unzipped the body bag they had it in and started to try to reanimate a little bit. We'll see how that plays out. I would say it's really going against the tide because the seasonality is just it should be good. The fact that it isn't is the telling sign to me, right? There's something that's holding this back right now for now, and it could just dissipate and go away, and we might be up and away and onward and all the rest of it come next week. but it's held up to this point, so this market has just been held up. Silver, which again I referenced earlier, that was crushing it, but the stocks were not. Silver was OB. I think I did cover that in a webinar the last day, 2 days maybe. I covered it in both actually that I participated in. So it was very stretched. I think it was due. That's why I made my adjustments anyway. Some of the stocks didn't run. Fortunately, a few did nicely, but not all the stocks that I have really ran. Just a few did, but they did run nicely, and I made my adjustments. It could have been coordinated. We all know the story there. Silver, in particular, has always been the subject of manipulation, and it's been pretty much a proven fact that that's occurred over the decades. And there's a big desire likely right now to make sure that silver doesn't explode even further. I mean, it was making new all-time highs in the futures, and SLV was as well. So in terms of the mega caps, they're a little messy when you look at them. When you look at them as a package, they look a little bit better. But some of them are individually quite messy. That maybe is helping to end this week on a whimper, unless there's a late rally here in the final hour. We had this insta retrade again, like I mentioned in IWM. Even the spies didn't really make the new all-time high, but they got within pennies of it, and then they retreated as well. The most likely scenario, this is a very tough one to call. So on this note, let's go out to the charts and we'll start getting into this and we'll make sure we cover all that stuff. So let me just briefly stop the share and then we will reposition everything, get it out of our way. I'll get it over here. We'll move this over there. And there will be one thing that I try to, let me see if there's one thing I can bring up here, and that is this. We'll get started and take care of this, get this out of our way. We're going with screen 4 here, and that should be the AAII survey. And you can see just a little bit of a jump. Hopefully you're seeing my cursor. I want to make sure that's showing. It should be. And yeah, I think it is moving around in there. Good. So 30.8% is in terms of bears, right? That dropped a little further. Bulls popped a little higher. And so if you go back and you look at the last several months of readings all the way back to July, you'll see that this is the second highest reading in terms of bullishness. So you have to go back to October 8th at 45.9. And so this is the least bearish that these participants have been right in the past nearly, not quite, but roughly 6 months. So 5 months, sorry. Yeah, so that's right, the least bearish, nearly as bullish as they've been, just a little bit off from there, a percent plus. So you could probably interpret that as if you add these two together in a way, right? That's a little bit of a problem where very few bears, fewest bears, and nearly the most bulls. So just take that for what it's worth. I think you have to pay attention to stuff like this. That might be inhibiting things. So we'll have to keep an eye on it. But here is a look at the package. This should really be the package of, it's giving me this over here. That is odd. It's giving me some weird, that is not the right chart. It should have been, no, it's not letting me get that package over there on the right. Well, let's try it one more time because I think what it's giving me is Archer Daniels Midland. I just bought a few calls in Archer Daniels Midland. That's probably why it's still up there. That's what that chart looks like. Yeah. So nothing big, by the way, low risk. But I just, as part of the discussion we've been having, I think that this type of name could start to benefit. And I don't really have that many longs yet. And I just really put in a super small trade here just because it looks like it's on the cusp. And the trend is still up in the market. They haven't broken the trend. Seasonality's there. Just thought before I got started here this afternoon, I would take care of that. Anyway, you have the background on that, but the charts there to me are really close to shaping up. So it's sort of like a little exploratory purchase. Hopefully, it'll get things going. Let's get Google in there. Let's get Meta. Let's get Microshaft. Let's get Nvidia. Let's get Netflix. uh, plus Tesla. All right, so that's that. And it's still not giving. Wow, it is still, that is bizarre. So normally Thinkorswim will allow you to plot this as a package, but you could see that uh, this price, why am I, is that escaping me? Uh, wow, I'm having one of those moments. The scale over here, yeah. So the scaling right over here on this axis, that is not that's not the right one. Oh well, that there goes that. That's not even the right chart. So I don't know what happened, why it's not working. Let's see if it works on an individual name. Let's go to Microsoft, and yes, it does. So I don't know why that's happening. Anyway, um, let's take a look at these methodically, though. So let's look at those mega caps since uh, we have um, we have not many to go through, but this right, this is really not looking wonderful. You could make the argument, well, wait a minute, it's holding on to the 20 there, Apple that is in above the light blue line. It's a rising 20. Virtually all your SMAs are rising. It still looks good. I've been bullish on Apple. It really didn't deliver what I thought. I thought Apple was going to be able to make it up a little bit higher by the end of the year. I don't know. Maybe it will, but it doesn't really look that great right now. It kind of has been hemmed in. I don't know if this is because some players are they're taking a nice year from some of these mega caps and they're cashing out and repositioning into things like the IWM, not specifically the ETF, but you get the idea. Like the other sectors that things that we've been talking about that are not really participated, that are maybe represent better values, that they think as the economy improves in theory, as rates come down in theory, and as the world goes into this easing cycle uh, in sync, that maybe right other things really start to benefit more than just the megas and so on and so forth. So that could be some profit taking here by the end of the year, and they could be ready to get ready. They could be on the verge of deploying into other things. So just a thought I'd share. But as of now, right, you need to see this start to lift up to start feeling better about it. And if it starts cracking below the 20, you're at risk of just this low that exists between the 20 and the 50. So that could invite more downside. And that certainly wouldn't be the typical end of the year thing. But again, this is not, it's not something that's a lock, right? It's something that tends to happen and happens quite frequently, but it doesn't happen every single December. So that's again why you can't go to sleep on your risk. You've always got to manage whatever they're throwing at you. Amazon, right, this is a little concerning looking. I don't think this at the moment looks great. Again, not disastrous, but you're a lot closer to turning it into a bigger problem by cracking that 150 in Rust. So the 150 is there in Rust, and that's at about 223-ish, we'll call it. That opens the door to the 200 with possibly a lower high in place. And now you have a second, so it's sort of like secondary little lower high potentially here. So on in the shorter term trend, so not really that great at the moment. Need to see it really start to lift from there, but that is not something that looks immediately runnerish to the upside, is what I'm getting at. Let's look at Google, which probably been one of our favorite charts, and even that, right, for a lot of this year, and even that looks rough. Like that is obviously threatening to crack the 20 SMA. There's room to the 50. Certainly there's other flat lines that could stop at and fibs that could be there somewhere on depending on what your chart how you're charting it. But bottom line is, right, that looks roll over-ish. You could say, well, it did here too, and it did here too, and it did. So the jury's obviously still out. We don't know yet, but it's vulnerable is the point. So they need to sort of step in. This is where I'm calling it like the gut check for the bulls, because in terms of the indices or the index ETFs, these things are not looking wonderful because a lot of these things are problematic. There's Meta. I'm not so sure that that candle's accurate there. I don't. I would doubt that it is, but I didn't see the Meta action this morning. But anyway, um, look, that's touching the 20, right? And it's got lower highs there and it's got lower lows. So it's below the 200 in purple, right? So that's not really the meta that we really have, and Google we've grown accustomed to looking at this year. They're certainly not at their best technically. Here's Microsoft. and Microsoft is really just a stone's throw to the 200 day in purple. So this is far off the highs, right? So this is kind of a very interesting development here. Nvidia Nvidia is now also cracking back down towards the 150. It's below the 50, it's below the 100. The short-term SMAs are downtrending. This thing's testing near lows that it's had over the past few months. It looks vulnerable, right? So, oh, by the way, that's part of this whole thing is I'm lucky I played a couple things small. I had a couple little trades in one of my favorite spots to try to go to catch the outside scores, which is quantum, which may be a complete fantasy in terms of anything coming from it soon. For all I know, maybe it will be. You get arguments on both sides, but I just know when they stir those things up, they can get ridiculous. So I took some small trades in a couple of days in there, and those things got clobbered. Luckily, I didn't have time to get back to them and do much about it. But luckily, my other stuff, my metal stuff, did catch a bid, and I was disciplined enough to, like I said, do something about it. Here's Tesla. We talked about this earlier today. This one to me looks good. Of all of them, this one I think the charts now look good. This is just one for me that can be hard. I don't feel like I ever get a great beat on this stock. It's just one of those stocks. Some stocks just there's different resonance there. But look, it's above all your SMAs. Most of those are rising. Um, so it's kind of hard to really slam it now in terms of I don't like the technicals. It's got a plenty of energy stored up. It's hanging on on a day where the Qs are down close to 2% at one point, at least. It is up 1.3% as of now. It's been higher, but in the weakness, it's pulled back a little bit. But that one to me, that looks probably interesting. Netflix, the best thing we could say about it is it's super oversold, right? On the short term, it's oversold and really beaten up. So on that note, you could say, okay, well, that's not a bad thing, and so on and so forth. But I would say, look, there's maybe a balance trade, that kind of a thing. Avgo's another big one. Yeah, this thing we talked about it earlier today, thinking, this was somewhere around here, I think, and it's 370 or something. I can't remember the time. And just thinking maybe this thing tests the 50, and it is. They're have it several dollars below the 50, which opens it up towards moving towards the 100 there in white. So that is a big deal. Oracle's another one that we thought could maybe in a bull market, I should say a bullish market today, maybe that would put a little bounce together. But otherwise, right, you're really treating this as a quick counter trend trade. And if it does bounce, you don't really overstay your welcome unless you see news that you think something's really shifting or there's just incredible momentum, but that sustains. But otherwise, right, you have to given the way the charts look, you have to treat this as something like that, and that's obviously not acting well. So a lot of these things clearly are not acting well, which makes it hard, right? When your big weights are not really acting like they have for much of the year, like they often do as the leaders. And that's how you end up getting this right here. And you get up to 689.25. So you were less than 50 cents away from the all-time high. That's how close you got. So we were talking about it trying to test that or possibly get through. We were talking about all these scenarios that I put together. I didn't put together, right, this kind of expanding wedge that seems to be happening. That's, again, the market's great with giving you paths you don't expect. But it did kind of have the early week pullback, kind of like our white line, and then tried to rally all the way until yesterday on the close nicely. But then today's been nothing short of a great disappointment, I'm sure, for bulls. But this is very similar but different when you compare it to the diamonds at IWM, which again, new all-time high, insta retreat in diamonds, new all-time high in IWM, and then insta retreat. And we've seen this many times, which is why I brought it up in the webinars this week, because I don't recall a market in so many instances this year where it just barely powered to a new all-time high and didn't really close strongly on that candle, or they didn't really persist and just go, go, go for a while. It seems like as soon as it does, there shortly thereafter they come after it and start selling it. So I guess there's so many maybe breakout buyers that have entered this game that they're just feasting on. That would be the market maker community, etc., the institutional traders, that type of thing. I guess I don't know. I'm guessing that's what maybe is part of the calculus there. But a lot of people would disagree with this on this particular chart. Let me see if there's another one I can get. I'll do it over here. There's less, or will I? Oh, there it is. It didn't pop up on screen. I thought it would. So I'll get us this one, and we'll go to a little bit more time and crunch it in there. But this is the spiders without all that stuff on there that I created for us last week. And a lot of people would disagree that this is sort of an inverted Head and Shoulders. They'd probably want to see more of a drop here, and then the shoulder form better over here. And that still could happen, but it sort of has those types of characteristics. It's an inverted something akin to a Head and Shoulders. And so for me, I always look at these like I do so many things where it's not a fait accompli just because it looks like it should break out and go and really deliver a good pop. What you often get if you try to get to a breakout or you start a breakout and reverse, like we tried to get to one and we reversed here today so far, you often get a violent move in the other direction because people get up for set up for these expectations. Those expectations look like they're on the cusp of becoming fulfilled, and then of course the rug pullers do what they do, and they really Shanghai the living daylights out of people who got in a little too early or weren't disciplined to get out, and then they give them this violent pullback. Not predicting that. I'm just saying that you have to consider that a possibility. So what I'm saying about this week in terms of the charts, which I'll go back to this, it comes down to here, which is the most likely scenario, very difficult to call. It's go with flow, be very nimble. And I would say expect news since market not behaving carefree. So this market is not behaving carefree. If you say, well, hey, what's the big deal? Look, it's not the end of the world. We're just barely removed from an all-time high. I would agree with you, of course, but you should probably start to think that there should be better performance here. What's the holdup? If everything's as wonderful as it's been made to sound, and we've got this rate cut cycle started, and so on and so forth, and so it's happening globally, you could say, well, a lot of it's already priced in. Well, then you're really not a bull, right? I guess you're not a bull if you're thinking a lot of it's priced in. But if you think that the market is still behaving bullishly overall with its complexion, it really should be, and the trend is still up, you really should be expecting a little bit more than this, given, right, that these guys love to uh, slam it home when they get this close to the finish line of the year for their bonuses, which is why, which is the Wall Street plumbing that we talk about, that the natural sort of human biases and how they want to mark things out for the year. And of course, they want to give themselves the best report card and bonus they can get. So that's why you often see this flurry, and people that are underinvested have to really capitulate and start following along. But that's really yet to happen. So you have to be patient. There's still 2 weeks plus, really technically. So it could still happen. Don't want to write it off, but it's just at the moment, which is what we're dealing with. This is really not a good look to finish the week near the low of the candle and way off of yesterday's close and high. And below, more importantly, betwixt and between, where you're below what was support still, and you could not convincingly fight your way back into the channel and hold that level. That's been going on now for a week. So this people, you might think it's coincidence. I don't. I've seen this happen a gazillion times over the decades, where these lines that I keep telling people, you have to make little adjustments to them to get them to fit well, but they end up still being pretty close to how you originally started in the end a lot of times, but they matter for whatever reason. I couldn't say, but they do. And so now you're between, right, this former resistance on the corrective phase. That that's now a support line. This is now a resistance line up here in blue. And we are again betwixt in between. So how do you trade it? Well, remember the bigger money and better opportunities happen when you're in a trend phase. Is it fair to call the last 2 weeks a trend phase? I don't think so. It's more of a consolidation when you look at it. So if you're not crushing it lately, right, always go back to look at that market price action, and that'll give you your report card. And if it was really trending strongly and mainly in one direction, like here, like here, like in here, right, like in some of these other phases in here, and you weren't cashing in on that, then you might have a problem and be able to take yourself to task and say, okay, what am I doing wrong? But if you're not crushing it during a phase like this, there's really nothing to hang your head in shame or self-flagellate over because this is not easy trading, right? There's no sustainability from day to day. There's narrow ranges. It's just it is what it is. If you've been able to eke out some nice gains here and there, then you're doing a really good job, frankly. A lot of people are, I'm sure, getting chopped up and frustrated by a market that seems like it should go and yet won't. And I think that's why your AAII matters because too many people are expecting that. So you might need to have a little bit more scare before we get into something. So my way of looking at this would be your level is probably pretty darn big if we drop off, and we'll just round it off like we always do, because I mean nailing it to the pennies really hard anyway. It's more luck and with traditional charting techniques, it's more luck than anything. But you're looking at some, let's say 674, 675. So you start getting below 674, I think that's when your problems start developing on the price action. Clearly, to start getting back in the game and breaking out, you've got to be making a new all-time high. Right. So inside of there, you're just really sticking and moving until we move beyond one of those key levels, 674, or let's call it 690. And really, that's not that big of a deal. You're talking about 1% down and a little bit more than 1% up. So the market probably has to have a decent day in either direction in terms of magnitude to get you in the ballpark of where it gets serious. Otherwise, if you're in narrow range stuff, it's going to be, unfortunately, more tedium. So I hate to break the news, but that's how I see it. So why would I not say, well, wait a minute, the trend is up, we should go. There's an inverted head and shoulders-esque type pattern here. Yes, I agree, but you're below this trend line. And that trend line to me is a big deal personally, and they've been for a long time. So you just can't reclaim what was really the trend and visually and in terms of support and resistance. You're not back in that channel, and you should have been able to do that probably. Because did you get what you want in terms of your rate cuts? Are there more rate cuts on the horizon? Supposedly, is there sort of like quiet QE, excuse me, back on the table? Yes. How did the market do when there was QE? Tremendously well. They're supporting stocks, uh, liquidity, et cetera, right? But unfortunately, right, it's just there's something that's holding back those megas, which could be profit taking and rotation, could be other things, could be overvaluation. I really don't know. Just could be repositioning, could be a lot of different things. I don't know. But the point is, you have to trade the markets that it's in front of you. So right now, if you try to force something on, I don't know if it's there. And I don't want to call for a breakdown with high confidence, knowing that I'm going against seasonality, and that's where this slide comes back in. So for the people that want to go with the most likely scenario, you already heard the first line. The charts are still positive on balance, but not without issues. So sensing that there's an increased chance that negative news developments derail given the finish. So what I'm saying is the fact that we didn't behave as well as probably a lot of people expected, maybe too many people expected, tells me there could be the fact that it's not happening tells me there's either something lurking or the gang hasn't, in their opinion, created sufficient levels of scare like Mike Wazowski to be able to really start to run and gun. So we'll see what the news brings right over the weekend. It could change. I still think we're at a real juncture here, and I mean that in terms of wow, because inverted head and shoulders-esque versus can't get back in the channel versus maybe breaking down below uh, 674 in spies, that could bring on more scariness. So it's really a very interesting juncture. Plus, there's all these things percolating, of which the yen carry trade is part of. The AI story, it seems to be that maybe the wheels aren't coming off that story, but the wheels are maybe running low, like my wife's cars, in terms of tire pressure because of the cold weather. And you get those alerts and all that stuff, especially on the European cars. Just keep alerting you no matter what. You're a little bit under what's suggested, and they're all over you. But anyway, yeah, so you've got that going on. So this is the battle. Here's the dividing point, right? You've got this, where are we to? We talked about all these things already, and we also talked about the on the counterbalancing side, instant retreats, problems with the megas, and bubbling percolations, which is redundant. But the point I made a kind of joke there, but the point is that there's not just the yen carry, there's not just the AI story. There's other problems where some people think certain players are on the ropes, yields are up. There's all kinds of political intrigue in terms of Venezuela and other things like that. It's just, again, super interesting times that, again, you have to respect the risk. So I would say, look, you get below the 50 in the spies, that's bigger trouble as we talked about. But if you get back in the channel, then I'd start feeling like somebody wrapped a nice warm fleece or flannel blanket or both around me, and I'd feel like, okay, we're back in the channel, which means we're at new all-time highs, and they're probably going to try to push. Probably going to try to push. If they're able to do that, they're probably going to try to push with such little time remaining in the year, just because, right, that nothing they care about more than themselves. So I can't. So I still think there's a chance that monkey wrenching is looking more possible because we kind of got the news and there was sell on news, if you will, in terms of the market and this SPY after they got what the Fed wanted. So there's all that kind of stuff. There's the typical Trump penchant for making news, not to let the happy talk get distract you from your risk management. There's also the usual closing, but I kind of beefed up the charcoal swans because these are some things that no, I wouldn't say no one. I shouldn't say no one. Not a lot of people are paying attention to these things, it seems, compared to if they were a problem. So that they haven't come anywhere close to really being super front page-ish. Certainly not panic front page material. So they're kind of known, but not really widely covered and appreciated. That's why I'm kind of calling them charcoal because they're out there. You can barely see them because they're just covered a little bit, but they could erupt and become more front page concerning. That would really surprise a lot of people, given how AAII is positioned and not feeling comfortable when we're really with the consensus. Which the reason why I'm really with the consensus is the story that we just laid out in terms of rates and liquidity and so on and so forth. And I still, if you forced me to come up with an opinion, I would still lean that way into next year with the way things look right now. But we could see that breadth was looking really great until this market fell apart today. You're getting near highs or back towards all-time highs in some of these readings, like cumulative volume index on NYSE. Your McClellans were really rocking and rolling back up. They kind of nosedived today, and so did the new highs. They fell off too because the net new highs, new lows, because this has been a rough session. So still overall, I think breadth is still trending in the right direction. It's just that today was a rough session to this point with just a half an hour to go. Then if we shut that down, we can bring up our sectors, and the sectors are going to really, I think, they're going to flash the same thing where a lot of those were acting well, and they're kind of going out with a whimper. XLE was getting really close there. That's backed off. XLF made a new all-time high, something we've been saying, okay, I think keep an eye on that. Keep an eye on XLE, XTN. We talked earlier, I think last week we were saying it was overbought. It didn't matter. They kept taking it up, right? So, but now it's probably really overbought. probably due for a little bit of a pullback in most cases. But your leadership sectors, which were looking like they might start attacking, they both either backed up in the case of XLK, which is a lot like SMH, and the communications also have really just stalled, right? So a little bit of a bid in XLV, which tends to be defensive. XLU, I guess we have to say, after it has pulled back so much and split, I believe, it maybe got a little bit here to be defensive because it maybe got cheaper. They like the valuations, and it can be somewhat defensive. But real estate, nothing special. Staples bid and halt. There's been a halt to the XLY rally, which that's a little bit of a slight negative there. And then new high, recent highs in XLB, new all-time high in XLI, but again, ending the week with a poor candle. So again, I would say on balance, is it probably still pretty good? Yes, it's just not ending on a really great note, and it's not looking good. So you have to be a little bit cautious because what we're doing here is just trying to be objective about what the market throws at us and going with it. We're just trying to listen to what the market's telling us or reading the market tea leaves, as they say. We're not trying to do anything else. We're trying to do that objectively. So I think on balance, things still look pretty solid when you look at the sectors, the main 12 we do look at, but it's certainly not as good as it has been. And even something like another important sector, XAU, this right after powerhousing again, that sort of came under pressure today after making a new high. And SMH, which is a super important sector, this is a real rollover here after making a new high, right? So this is a real rollover, and now we're backing up. Again, was it due? Probably, yeah, it probably was due. It's probably overbought, probably needed to back up, so on and so forth. But again, you double top like this, not a good sign. You'll look back and you see a lot of things will put a double top in, and you look back in history and you're like, damn, that double top actually mattered a lot. So that's really going around the whole discussion, I think, right there, overall, in terms of where we are. We covered everything on the slide. What I'll do is I'll cover the cues and we'll talk about the same thing, but they're obviously a little bit messier. What I'll do is I'll try to get us that cleaner chart that I added. Where is that? There is the cleaner chart, so you don't have to look at all this stuff. And let me just, I don't actually don't want to mess with those fibs, but you can see with the lower high in here, this is really interesting based on the fact that the Qs have been the leader, one of the leaders along with the spiders, but that's sort of changing here. A little bit of an adjustment on this line. I'll put it right about there for now, just to give us the idea. And so a little bit lower high, and you're breaking down. This is a really kind of ugly finish here. And now, right, you start talking about how far you retrace of this move off of this low to here. But this could be bad in a way. You don't want to get too far ahead of yourself, but right, low or high, and then this low actually cracked the trend. So you have a trend cracking deep low here that's now resulted in this lower high here. So you really need to see a higher low get put in somewhere right on the sooner to hopefully avert having to come all the way back down here and retest this thing, which would actually be not be the end of the world if they did and held it, because then you'd have something that looks like a W, or more of like a wider base W on the daily. And if that happened, those are great patterns to go long. And then I would go long just after the second low, as soon as you see a reversal, and just be disciplined. So someone try to remind me about that if we get into that scenario, and I'll cover why I think you should be very aggressive when you see the wide base W's. But anyway, this here, this to me, right? Obviously, you really can't take a lot away from this and say, "Oh no, no, I love it. It looks great." I mean, I don't see how you could say that the way it's acting here, and especially at this key time. So I think the cycles have gotten messed up here, and if this has more weakness, it could be we could start losing other important sort of time cycles that would produce more weakness more than likely, or at least bring in a period where there's a lack of strength. That would be disappointing. So really to get back into this name, you're at a key support level, really right where you are. You can see that from the former highs. Needs to hold here, otherwise it invites more downside. You could just take your pick off of those numbers, and I'll just expand them. But you could just say, well, where do you start to? I'll get rid of this one actually though, because this was based on a high that no longer is the high. So this here, where's that going to? Let's see. Make sure that one's. Nope. I keep getting the difference between. So that's 0 to 100 there, and then it would be, yeah, 0 to 100 there. So how far is that going to start to drop back down? That was based on another time too. So I'll dump that for us then, and I'm going to dump this. So that's probably, that's probably fair to do that. I'm just thinking out loud here to get us another fib to work with. And everybody's got their own techniques on these things, but so this is the one I'm going to work with as of right now. And that's going to give us 637.01 at the top. And then this low here is 559, 559.54. Okay. And there we have it. So that's there's a fortunately beneath that level that we talked about, which is 612, which is right what we're near, there's 607, and then another fib's going to come in sort of where there's close to a flat line too, near 600, so at 598. So you've got those couple of levels to work with. As far as getting back up, this is a little bit of a mess now. You probably, to be very aggressive, you probably would want to go into it and start doing intraday work. But if you're just talking big picture stuff, you have to at least get through there as it stands right now. And if there's more drop, we're going to have to add another. We have another couple of rough sessions. We might even have to add another line to it. So as of right now, I think you pretty much need to reverse this whole candle is what you have to do. Just start feeling like, okay, there's a chance here, but that's so close in proximity to getting back in the channel. You may as well say on the bigger picture level, you need to get back in the channel. So again, there's not much to offer there on the upside. I think you have to go into your intradays, maybe something of a little bit of heft here. And yeah, you're probably going to have to take that level. That's your 30 minute. You're probably looking at about, to be safe, you're probably looking at about 618. And then by the time, if you were to do that and work your way up, you're looking at, hitting resistance probably near 621. So I don't know if there's great trading in there now, but remember, this thing tends to react to news. There's a lot of big news in that space on the tech area. There can be so many stocks that change fortunes of this there. So, but I would say, look, probably 618-ish. Well, wait a minute. What is that right there? Did I give us the wrong number? I guess, well, you want to be really aggressive, 617. You could try to get in a little bit sooner, but it's less than 1% away, but you get the idea. So that's that. Let's jump over to IWM. The last thing we ever really get ETF paper in UOA is is the diamonds. So I'll cover them last. But again, you're pretty much getting back to your high to feel better, big picture. And in terms of where this thing goes back to, I'd prefer not to have this stuff get in our way. Let's see what I can do here with this. And then probably have to draw support right around this slope right here. You have a couple levels right there. So yeah, this thing's right on support. And if it cracks down below here, which it's looking vulnerable the way this market is, unless there's some last minute bullish heroics, looking like we could drop a little further. And I think you could see probably I would put this at around 247. So that's going to be right just about a little bit more than 2% below the current low. So that would be the next level there, 247-ish. And then there's another real flat line right here as well at 242-ish. So down 2%, down 4%. What can you say? And that's basically where it is. And then getting back up and blasting through. But like I said, I would keep this on your radar because this to me has the potential to really catch up if we have the bull market extend into the new year, maybe into the first quarter, second quarter, this could be a real performer. In fact, you could see with the way that some other bigger picture things, I'm sorry, bigger names like the diamonds, I'm sorry, like the spiders and the Qs, the way they're struggling a little bit, and IWM is just barely off the high. It's sort of telling you a little the hint of that right now. Diamonds also were looking great. You're looking at getting back on the horse. You need to break out and hold above. As far as where you would be, you probably have a very flat-ish support line that comes in here off of this low and then that low right there. That would be probably be one. Another one you probably would want to keep your eyes on would be this one here. And so your first line will be right there at that 479 in diamonds. Yeah, 479, 480, and then the next one won't be too far below there. Call it 477. And then you start getting into where it becomes a bigger problem, I think. Then you could maybe have like a 2% drop. But you're really not in a great spot to go long unless, yeah, obviously, until they turn it around. And you're probably again you got to get a really aggressive and not wait for the new all-time high. You really have to get some kind of chart that has a little bit of heft to it, the way that I like to do it anyway. You probably have to look at this the same type of thing here, which would put you at about 487. So you start reversing from sort of like a little double bottom from here, then maybe you start to get above 487 and everything's back on. But I would say go with it. My closing remarks would be like I would just be ready to go with the flow. But I think you have to acknowledge that right now there's definitely a little bit more in the air, and I just feel that as though we've got to get these AAII people to not look at it so rosy. If that were a little I mean, it might be it's kind of the most bullish reading of the year in a way, or second most. I shouldn't say year in the last 5 months. I mean, so, it is a contrarian thing. We've pointed it out. It's been very helpful to us many times. I wish I had there's better things out there. I don't have access to them, but I wish I did. But, that would probably even help more. But yeah, I think the sentiment's just a little too good with everything falling into place. And you all know that the market has a great way to disappoint people, just use the obvious against people, so on and so forth. And so you've got to be ready for anything. A failed breakout by three of the four major index ETFs in the spiders, something akin to an inverted head and shoulders that's could get rejected and really fall apart quickly, especially if the 50 gives way at 674, down another percent, roughly speaking. Then you're looking at the 100, like we talked about. So yeah, I mean, this could turn into something a little bit more swift. So in terms of sell-off, and if it does, it's probably not a bad thing. If they take really the third week of the month and they have some ugly monkey business that could really sour people quickly, that would probably help to set up that final 2 weeks of the year nicely and then into the new year, barring, right, some of those percolating issues really erupting. And I wouldn't rule those out. I don't mention those lightly. They don't, they're sort of subsurface percolators or back burner issues for a reason. But my experience in all the decades of being involved in the market has been that those things are there. Most people ignore them to their own peril and or get conditioned to think they don't matter because the market doesn't recognize them. But as we've always said, in our experience, what happens is they're out there and you should pay attention to them. Just trade the market in front of you, trade the market in front of you. But when you start to see things not behave well the way that maybe you think they normally would, normally should, kind of like now, and they're not, then you're like, okay, this is maybe where there's some kind of a little bit of an eruption where these guys are selling when maybe it looks like typically they buy. And they've got a lot of what they wanted, or I was told what they wanted, right? So why are they not happy? Why are they getting out of some big names and so on and so forth? Maybe the story on some of this stuff is unraveling, and people are doing the math and saying this is not even really logistically possible to achieve all that is getting built into these stock prices just yet. It's just not going to be there. I think maybe the Microsoft CEO essentially said something about that a few weeks ago, something to that effect. That's my recollection. So anyway, was it Microsoft? I think it was Microsoft. So just think about things like that and just be smart about stuff. And remember, if you have had a really nice year and you've got some things you really love and don't want to do anything, this is not tax advice, but you could be smart and collar things for now. And if you, I don't mean just because like I'm suggesting that you think about it. I'm just saying like if you do really have concerns, then you could collar. You can do other types of trades or hedges, and you can live to sell another day while protecting yourself, right? So if I were up, let's say, I don't know, let's say I'm up 130% in something incredible, like run this year, you got to be happy with whatever stock you were in, right? If you said to me, well, wait a minute, it's looking vulnerable. You want to lock that in, or do you want to let it all like let it bet it all on the table right now when things are acting a little funky? I would just collar it. And if I'm concerned, and then as soon as my concern dissipates, right, I'm going to uncollar it. And that could be, Wednesday. I don't know. It could be Monday if Trump makes some really positive announcement as per the market's view on it. So these are the things I would just do. As I've said many times, there's nothing wrong with hedging and then unhedging. There's nothing wrong with addressing concerns that you have and then saying, oh, those were unfounded. And I lost a little bit of money on my hedge. Yeah, but I was able to sleep at night knowing I wouldn't give all this return back. There's really nothing wrong with that. And I saw something popped up yesterday where it showed how being in the market really does matter over the course of time. But the interesting facts, and this comes up from time to time, if you miss the 10 best days in the market, you really underperform. However, if you could be in for the best 10 days or miss the 10 worst days, what choice would you make? Would you rather be in for the 10 best, or would you rather be able to sit out the 10 worst? And it turns out that if you sit out the 10 worst days, that is far more impactful in a positive way on your portfolio than being in for even the 10 best days. So in other words, if you sidestep disaster when everybody else is getting disastered, right, you're really, really ahead of the game. That's what saves a lot of people's bacon, where they don't give so much back that they've made. So I'm not saying that's the case right now. I really actually don't expect that to be the case. I'm just putting these things out there. You can look that up somewhere on formerly Twitter, but these things are historically or empirically true. And so it's worth noting, since I've come across so much of that stuff over the course of time. If you're new, hopefully that kind of thought or a little nugget can help you out. That's one thing that motivated me to do what I do, which is to hedge and unhedge, without really worrying about it. And if I lose a little money on that, I don't care, because if I've had really great performance and I feel like that's the smart thing to do, for me, it's just part of the game. That's part of the cost of playing the game, and it's definitely saved my bacon in a big way a few times. I got clobbered when this was going on in a lot of things, and luckily the VIX stuff was working for me to a certain extent that I was in, and it didn't really turn out to be anything great for me. The VIX never launched in a way that was going to let me benefit dramatically, but it kept me covered to a great extent. And that's what I wanted it for, just in case this erupted into something bigger. And then I tried adding a little bit here and there and got back in on some things. And when we were in the consolidation in metals, I got back in, things like that. So I'm just trading around what's happening, just like you are, but I just don't have the time to really do it because I'm doing all the other stuff. I just do the best I can under the circumstances. But right now, if I were holding on to anything that had some incredible gains, if we start acting poorly and we're threatening the 50 here in SPY, the way that so many other things are looking right now, and you're getting close to cracking key levels in the other ones, I would do that and just be prepared to undo it. I would just do the collar. I would just buy the put, sell the call, not put any money out to do it, roughly give or take just a few, whatever, little bit of outlay if I need to. And I'm done. I'm just going to wait it out, get myself to the new year if I hold equity, and then if I need to decide to sell and rotate into something else, then I'm into a new tax year. So I'm going to end on that note. Going to wish everyone the very best, happy, healthy weekend. Have a good time there. It's getting cold where I am in South Carolina. Hopefully, you won't find it too cold wherever you are, although I know some folks are already far colder than us, so I can't really complain too loudly. But yeah, and if you're at the event in Miami for Market Rebellion, I hope you have a great time and safe travels for that. And I do hope that something that I share with you helps you out this upcoming week or some week in the future. And I always want to thank everyone for tuning in. All right, everybody, take care.